All right, let's dive in. Today, we're tackling the curious case of Cardano, a project that is sending some of the most mixed signals you can find in the crypto market right now. Is it soaring to new heights, or is it spiraling toward new lows? Let's break it down. On one hand, you're seeing these headlines celebrating an 11% surge, making Cardano's token, ADA, a market leader. But then, in the very same news cycle, you see reports of it plummeting, extending a painful slide towards its December lows. I mean, it's enough to give you whiplash, right? So how can both of these things be true at the same time? What's the real story behind the headlines? That's exactly what we're going to unpack. So here's our game plan. We're going to start with the bull case, which is all about some exciting innovation. Then we'll flip to the bear case, fueled by some serious market headwinds. After that, we'll see how these two stories fit together. And finally, we'll cover the key signals you should be watching. All right, let's kick things off with the bull case. Why are some investors so optimistic about Cardano's future right now? Well, it really boils down to two huge developments. The excitement really started with this impressive 11% jump in a single 24-hour period. Now, a move like that doesn't just happen in a vacuum. It gets people talking and signals some strong buying pressure. So what was the fuel for this fire? Turns out, this whole surge is being driven by two really powerful catalysts. First, a major tech launch called Midnight, and second, a huge stamp of approval from the institutional world via Bitwise. So, what in the world is Midnight? Think of it like a specialized partner network for Cardano. Its whole purpose is to add a programmable layer of privacy. And that's absolutely crucial for things like regulated finance, business data sharing, and identity verification, areas where total transparency isn't just undesirable, it's a non-starter. And the tech powering Midnight is called Zero Knowledge Proofs, which honestly is a total game changer. In simple terms, it lets you prove you know something, like your age or your identity, without actually revealing the sensitive data itself. This is huge for privacy and regulatory compliance, and it's right at the heart of the Midnight network. Now, that second catalyst is a major signal of institutional buy-in. ADA was included in the Bitwise 10 Crypto Index ETF, which trades on the New York Stock Exchange. This is a massive deal because it gives traditional investors easy, regulated access to ADA, signaling that Wall Street is taking it seriously. In the crypto world, institutional money is kind of the holy grail. It brings legitimacy, stability, and huge capital inflows that validate an asset on a much bigger scale. But, okay, that's only half the story. Let's flip the coin and look at the other side. Despite all that positive news, there are powerful bearish forces creating some serious headwinds for Cardano. And this quote from our sources just nails the mood perfectly. Despite the hype around Midnight, ADA's price has been dropping hard, threatening to retest its lowest point of the month. See, this isn't really about Cardano's tech, it's about the bigger market environment being pretty hostile right now. So this downward pressure is coming from three main places. First, a hawkish or cautious tone from the U.S. Federal Reserve has spooked investors away from riskier assets like crypto. Second, we're seeing a clear drop-off in demand from retail traders. And third, and this is a big one, Cardano's DeFi ecosystem is still lagging way behind its rivals. And this table tells a really clear story about that decline in retail interest. We're looking at futures open interest, which is basically the total value of all the speculative bets on ADA's price. It peaked at nearly $2 billion and has since crashed to just $773 million. The bottom line is crystal clear. A ton of that speculative money has just walked out the door. And then there's this chart, which really puts things into perspective. Total Value Locked, or TVL, measures how much money is actively being used in a blockchain's DeFi ecosystem. Cardano is sitting at about $200 million. Now compare that to BNB Chain's nearly $7 billion and Solana's $9 billion. This is a red flag for some folks because a vibrant DeFi ecosystem is what drives usage, attracts developers, and creates that network effect. It shows that, despite its ambitions, Cardano has a long way to go to catch up on DeFi adoption. So how do we make sense of all this? You've got a project with exciting new tech and institutional backing that's also getting hammered by the market. This is where we put the two sides of the story together. It's a classic battle of tailwinds versus headwinds. The tailwinds are specific to Cardano. Midnight's innovative privacy tech and the legitimacy from the ETF listing are pushing it forward. But the headwinds are market-wide. Macro fears, nervous retail traders, and fierce competition are dragging it, and honestly, the whole crypto market back down. Okay, so with this tug-of-war going on, what are the key things we should be watching to see whether the bulls or the bears are starting to win? The sources point to a few critical signals. Here are 3 things you'll want to keep a close eye on. First, that 50-cent price level. It's a major psychological and technical barrier. If ADA can break above that decisively, that's a strong bullish signal. Second, watch that futures open interest we just talked about. If that number starts to climb steadily, it means retail traders are coming back into the game. And finally, keep an eye on the TVL. If that $200 million figure starts to grow in a big way, it means Cardano's DeFi ecosystem is finally getting real traction. And that brings us to the final million-dollar question. With groundbreaking tech pushing against a tide of tough market conditions, is Cardano setting itself up to be a case study in resilience? Or is it going to become a cautionary tale about how even the best innovations can get thwarted by bad market timing? That's the question the market is waiting to answer.